What's going on, everyone? We have an insane week ahead of us as the U.S. bombed Iran this weekend and joined Israel in this war. We're going to see some big moves in the market this week, and it is an exciting time to be a trader. In today's video, we're going to cover the most important information you need to know from this weekend's events, which stocks are set to move the most, and what to look out for. Tom is on vacation, so he won't be with us this week. But besides that, we have a ton to cover today, and we're going to get right to it. So if you don't already know, essentially this weekend, the U.S. deployed B-2 bombers and dropped a handful of bunker buster bombs on Iranian nuclear facilities. These bombs have actually never been used in combat before, and naturally, when there's conflict in the Middle East, people always look for a rise in oil prices due to the risk of supply disruptions. But if we really want to be able to catch the big moves, we have to think about the second and third order effects of this conflict. And to do that, we have to think about what's going to happen next. So as of right now, Iran basically hasn't said too much besides that it reserves the right for all options. And we all know that they're going to do something. We don't know exactly what. Realistically, I don't think the worry is necessarily that Iran is going to try and shoot a missile at the U.S. homeland, but instead try something that might actually work, like have independent small groups or individuals do the dirty work, which is why we already saw news of major U.S. cities on high alert after this weekend's events. We can see the New York Police Department is already increasing patrols at religious and cultural sites, among other things, and we're all basically waiting to see what Iran is going to do next. Either way, it doesn't seem like Trump is willing to give them that much wiggle room, though. He basically said that any retaliation by them will be met with force far greater than what was witnessed this weekend. So basically, the big risk here is if we end up in a never-ending loop of retaliations on both sides, and unfortunately, Israel would love to have the United States help them fight this war, and to be honest, they're doing a pretty great job at pulling the U.S. in so far, especially as evidenced by this weekend's events. One key thing that is certainly worth paying attention to is the Strait of Hormuz. Basically, one thing that really stood out this weekend is that Iran ordered the closure of the Strait of Hormuz for the first time since 1972. This is important because it is a vital choke point for global oil and gas trade, as around 20% of the world's daily oil consumptions actually passes through this strait. To put that into perspective, there is more oil that passes through the Strait of Hormuz than you could say the the Panama Canal and the Suez Canal combined. As of right now, crude oil is trading for around $74 per barrel. And I saw some estimates from JP Morgan saying that it could get as high as $120 to $130 per barrel if we do see a closure of the Strait of Hormuz, which again is something that Iran actually ordered just this weekend. Some analysts were actually calling for increases of like closer to $150 a barrel, but we'll see. And this is so important because rising oil prices is exactly what Trump does not want to see, because that would significantly, of course, increase energy prices, therefore spiking inflation and making a lot of people very mad at him and eliminating his chance of rate cuts, as we all know, which is something that Trump wants so badly. So basically, Iran's next move is going to have ripple effects that are much more important than most people think. I know Iran has said several times that if the U.S. joins this war, that they're going to retaliate against U.S. forces in the region, against U.S. interests, and that there are a lot of those. So basically, given this situation, there are a lot of opportunities in a trading sense that will come from this. The first one that is certainly on watch and is certainly getting the most attention is oil. Oil has already been increasing up to this event. We could see in the beginning of May, crude oil was trading for around like $56 a barrel. Now it's all the way up to around $74, and its trend has definitely been accelerating over the recent days. The most popular ticker has been USO, which is a nice like oil ETF, very liquid, and it has definitely been getting closer to a breakout. And one thing that is very interesting, and I know this, there are certainly some significant differences between what we are seeing now with Iran. But something that is somewhat similar, especially in recent times, is when Russia invaded Ukraine on February 24th of 2022, USO and just oil prices in general did extend to the upside for multiple months after the fact. And I think this situation with Iran would actually be much more significant for the global oil market for multiple reasons. The main point of showing this is that when there are conflicts, oil prices certainly have the ability to rise in a pretty strong and defined way. One thing that is very interesting is that the more Iran retaliates, especially like the more intense they retaliate, the more explosive it will be, not only for USO to the upside, but you could just say the entire global oil market. Again, there are multiple opportunities that come from this. Of course, our short-term traders out there will have a lot of scalp opportunity as USO and just oil in general continues to move in a strong, just volatile, explosive way. And as we saw, like I said, again, from 2022 with the Russia situation, there were certainly some very significant trends that came from that event. And I think the same can definitely be said this time around as well with Iran. That is, of course, one way in a short-term sense, but I wouldn't be surprised if there were also opportunities trading a potential broader uptrend that happens over the course of multiple weeks to months, especially as this situation develops, because as of how it stands right now, it doesn't necessarily seem like this might just blow over. So basically, with that being said, there are multiple opportunities that will come from oil right here. But I will say what's more important than I would say anything else is that you can't just jump into, let's say, USO or quite frankly, any other stock that is in play right now without having a plan. If you just buy out of the money call options, close your eyes, cross your fingers, and hope for the best, you're going to get mediocre results that go along with those actions. So what I think is extremely important right now, especially as more opportunity is set to develop right in front of us, is to be crystal clear on what move you're trying to capture. If you are someone who does not have the ability to trade the intraday trends, then don't even try to capture those. Go for the ones that, occur over multiple days to weeks, potentially months at a time. And for a situation like this with USO, oil, and, this whole geopolitical disaster going on, there's quite frankly opportunity in across all time fractals. So definitely keep that in mind. So oil is definitely an area of the market that should be kept close on watch. USO has been the hottest ticker so far, but there's also stocks like ExxonMobil, CVX, COP, MPC, XLE, and a handful of other energy-related tickers that all have potential to move and all have already started moving, which is always good to see. But another area of the market to definitely pay attention to, which is actually my personal favorite, is trading volatility. So if we look at the volatility index, right now it's right around 20. And while it's impossible to predict the exact path everything will take going forward, I think it's very reasonable to assume that we will see larger moves in the market going forward, and that is something that volatility benefits from quite a bit. A ticker that should definitely be looked at pretty closely is UVXY. This is the type of trade that can do very well in the event of increasing just, volatility and craziness. This is a trade that you would certainly want to be more tactical about, where you really only want exposure to this when it is in one of those rare explosive uptrend phases, as we've fortunately seen many times over the past few years, with the most recent one being in April. For example, if we look at the April sell-off for the S&P 500, when Trump announced his Liberation Day tariffs, basically the magnitude of the moves that we saw in the market significantly increased because everyone was panicking about tariffs, and we were seeing giant moves in both directions. Of course, the market tanked a lot, but we also saw some of the largest, best performing days in the market for multiple decades. So basically, when we have craziness going on, we see bigger moves in both directions, and volatility ETFs like UVXY definitely benefits from that. We could see during the March and April Liberation Day sell-off, UVXY went from 20 all the way up to like 53 just over the course of a couple months. UVXY is definitely on my bullish radar, as I think that we are definitely seeing the beginning of some craziness ramping back up again. And again, during times of volatility, it doesn't mean that the market always has to come crashing down. We're really looking for bigger moves in both directions, and I think a trade like this aligns pretty perfectly with the situation we currently see in the market. For my advanced traders out there, you can always look at like the actual volatility index, VIX, and trade like call debit spreads on this as well. But either way, I think the volatility side of the market should definitely be close on watch. Another thing that a lot of people are looking at right now are defense stocks like NOC. Northrop Grumman is actually the company that actually developed the B-2 bombers that we saw used in this weekend's operation. And they've been getting, of course, more and more attention, not only over the past weekend, but honestly over the past few weeks. If we do continue to see an increase in conflict, not only in the Middle East, but even just in general, that can definitely benefit defense stocks because they are producing these assets that are being used so much. And not only does defense spending rise in situations like this, but it also needs to, get replaced as some of these assets inevitably take damage or, just get destroyed. So basically, NOC is a stock that is definitely on the radar, but there's also a lot of other defense stocks out there like Raytheon, which is RTX, Lockheed Martin, which is LMT, General Dynamics, which is GD, Kratos, which is KTOS, among many others out there. There are a bunch of war stocks out there, but all of the ones listed are definitely the most popular and the most liquid. These stocks are definitely on watch, not only for the next few trading days, but honestly, for the next few months out. Again, the more this conflict escalates, the more, the better these stocks and companies can perform. Of course, just like with oil, you can trade this in a broader sense where like if you have a thesis where, you think that this conflict will only worsen and you think that issues around the world will continue to rise, you might look to trade a broader trend for these defense stocks that last for the next few weeks to months. There's nothing wrong with that at all, but also if you're into like more of like a shorter term scalping strategy, you could also look at these for potential, short-term trades as well. As we've seen many times in the past, but especially the recent past, stocks like NOC, LMT, RTX, and these other defense stocks do have the potential to move and trend extremely strongly, and they've been performing pretty well over the past few years as well. So I definitely think they're worth keeping close on watch. They are certainly in play, and with this news just dominating the headlines, you have to keep them close on watch, especially when you see a headline like this, where the U.S. enters a war between Israel and Iran. So definitely keep that close on watch. And while these are the top 3 areas of the market to look at, there are also a lot of other spots showing opportunity as well, and we'll cover that as the video goes on. But if you thought the news with Iran this weekend was the only thing that was going to drive the market, then you are in for a sweet surprise because basically on Tuesday and Wednesday this week, we have the man, the myth, the legend, Jerome Powell, set to give his semi-annual monetary policy report to Congress. And basically, this is going to be a rare direct communication between the Fed chair, Jerome Powell, to both lawmakers and markets. What's really nice about this event is that there is a lot more uncertainty with it compared to FOMC interest rate decisions. For example, at our last FOMC interest rate decision, the market knew with a 99% degree of confidence that, Jerome Powell is going to keep rates the same, and we were all looking to see, what he was going to say about the path of rates going forward. And while that's nice and all, events like this where he testifies in front of Congress is a situation where lawmakers are, kind of going to grill Jerome Powell and really try and get some more market-moving information out of him. And what's really nice in the trading sense is that these events start pretty soon after market open, 30 minutes after open to be exact. So basically Tuesday and Wednesday are going to be super exciting. There should be a lot of not only good moves that come from this, but also good insights from Jerome Powell to see, how he is looking at this economic situation right now and what he sees for the path of rate cuts or maybe even rate hikes going forward, depending on how the price of oil moves. So that'll be super exciting on Tuesday and Wednesday. Basically, the earnings lineup for this week is pretty dead, but I don't mind that one bit because we have so much geopolitical news going on. Plus, we have a testimony from Powell on 2 days of the week, so no complaints there. For the earnings traders out there, though, there will be some reports from, you could say, like FedEx after close on Tuesday, Micron after close on Wednesday, and you could say Nike after close on Thursday. But besides that, we are all in the clear there. But another thing that's like super exciting is that as we look at SPY right now, it's actually at a critical point. So the S&P 500 has had a phenomenal recovery ever since the lows from the Liberation Day crash. Got extremely close to all-time highs. But now we have this news with Iran going on. As we look at SPY on an intraday chart, we can see that we're at I would say a pretty critical point as the market has been pretty stuck over the past few weeks. And now we have this news that happened over the weekend that is going to shake a whole bunch of things up with a whole bunch of uncertainty where we have to see how Iran is going to retaliate. The S&P 500 or SPY has been really bouncing off of and respecting this 594 support area, and it just broke below it slightly on Friday. Now that we have this news coming out this weekend, this is going to be a crucial area of the market to watch as 594, and I would say even down to 593, has been a support level that is certainly on the verge of being broken, especially with the potential gap down risk with futures opening up on Sunday night. If we do see a gap down, definitely keep a close eye on the 590, 587.50, and 585 levels for SPY. These are the next key areas of support, and ideally the market holds up here. But if we do see a true, rush to the exit all at once type of situation with the market, that can definitely be something where we see, of course, a massive increase in volatility, but this could also open up the door for, number one, in a shorter term sense, a lot of short-term bearish opportunities like we saw with the Liberation Day event, which I know people made a lot of money off of, but even more exciting than that, a sell-off can really open the door for traders who might have missed the initial strong recovery off of the recent market bottom to potentially scoop up some plays that they wish they did earlier. So basically, with SPY right now, it has been holding this key support right around 594 to 593. It looks like there's a good chance we might break below that, and in a short-term sense, there will be bearish opportunities, and in a medium-term sense, there could actually be really good dip buy opportunities as well, which is very exciting. If for whatever reason the market does end up strengthening, we do have a handful of resistance levels overhead right at the 596 to 597 area. The market has been struggling quite a bit at these levels over the past few weeks, so definitely keep them close on watch. They are levels that have been respected quite a bit, so definitely keep them on watch going forward. But another thing that's certainly worth paying attention to is that historically speaking, with data going all the way back to 1950, the second half of June normally isn't that strong. I know we're heading into, you could say, the 23rd day of June, and we could see from that point, we normally do see a sell-off all the way to like the 26th of June. So definitely keep that close in mind, I guess you can say, to go along with the news and general information that we have going on in the market right now. So either way, it should be a very exciting week. And I think with that being said, we should definitely get into some more specific actionable setups for tomorrow and the week in general. A stock that is definitely on my radar is CRCL. This has been one of the hottest stocks in the short term, where basically ever since it IPO'd on June 6th, it has been running like crazy. This stock went from $70 a share all the way up to $250 a share on Friday. And for those of you who don't know, this is a company who's heavily involved in crypto, and Bitcoin actually took a pretty big hit with this weekend's attacks. It actually got all the way below $100,000 again, which is something we haven't seen, and you could say the beginning of May. So it definitely is a meaningful move, and it definitely is a pretty rough sign and certainly a strong reflection of the bearish leaning investor sentiment to go along with this event. Either way, CRCL is definitely on my radar in a bearish way this week because I think it is certainly overextended, going from $70 up to $250. And also, when you have Bitcoin already, starting to sell off with this, I think there is a very real risk that CRCL's uptrend can break and this stock can, have a harsh pullback. I think it offers a great opportunity playing it to the downside, but I will say it is extremely important to be smart with the timing of this. When you have stocks going from $70 a share all the way up to 250, no one can predict, of course, exactly when it's going to turn over, but that's not necessarily the game either. With this stock, I'm definitely looking at it for a potential trend reversal and move back to the downside. I think there are a lot of people who are overextended in this stock, and when we do see a sell-off, I think that they're all going to rush to the exit all at once, and I really like how Bitcoin is already selling off with this. So it's definitely on my bearish radar, but again, this isn't something that should just be immediately jumped into right when the market opens on Monday. If we see a nice confirmation of the stock selling off, in let's say just a meaningful move lower, maybe that is 225, 220, maybe even if you want to play it really safe, like a break of 200. Those are all great potential signs for a break of trend and a change in investor sentiment. This stock is definitely on my bearish radar, but if it does not crack tomorrow, it might crack later in the week. So it is definitely worth keeping on the radar for multiple days. Another stock that is definitely on watch is Google, and it is to the downside. This stock got crushed on Friday as it fell by around 4%, and unfortunately, they got a pretty bad headline going for them. So basically, they look like they are going to lose an appeal against a record $4.7 billion fine from the European Union. Basically, Google is being accused of abusing Android's dominant market position to unfairly promote its own apps and services, especially their search engine. And again, this is a record, let's say, $4.7 billion fine. Google shareholders did not like that one bit. Not only did the stock fall, but it fell in a pretty meaningful way. A 4% move is certainly big for a company like Google, and their price action was beyond horrible on Friday. There were very few periods where the stock was actually moving up, and during those few periods, it was not meaningful, and it did not last long. Google is definitely on my bearish radar. It would be great to see a break below that 165 support area. And if we do see a break below this, I think it could definitely offer some good short-term, like scalp bearish opportunities. And what I do like about Google is that when it does have momentum, it moves in a way that offers very good risk reward, and its options move quite a bit as well. So I definitely think there can be opportunity here. So definitely consider keeping it on the radar. But besides that, let's get right into today's momentum plays. And with today's first one, we have Apple, which actually led the way on Friday as it popped up by 2.25%. So Apple's on the radar for a potential breakout to the upside if and only if they break above $202 tomorrow. Another momentum play is APP. This is AppLovin, and basically they got crushed on Friday, fell by nearly 6%. We are looking for a potential breakdown of the 322 area on this one. And then with the last one, we have Oklo, ticker symbol OKLO. This is another potential bearish opportunity where if it breaks below the $57.80 area, there can be some, momentum trend following short-term scalp opportunities to go along with this as well. Either way, for these three stocks, they are only potential plays if they break through the levels listed. The stronger and more consistent these stocks move, the better the setups become. Another very important thing to keep in mind, though, is that how you trade is much more important than what you trade. Having stop losses and protecting your capital, trading with a rational mind, and just having the right deep-rooted psyche all plays into making long-term profitable trading decisions, which is ultimately what's most important. So, with these setups and all other ones, make sure to protect yourself above all else. Protect your capital. So size reasonably. Have tight stop losses, because if you get stopped out, you can always re-enter. And, just trade in a smart, rational way. We have a ton of free information about this in the StockedUp Discord channel and the Key Lessons channel. So definitely check that out. The link for that is in the description down below. But besides that, I think it is now about that time to jump right into today's $1.3 million big money trade. And today we are looking at ticker symbol MDLZ, where the trader here bought the 70 strike call options that expire on January 16th of 2026. They put around $1.3 million into this trade. And while Mondelez is a little bit more of a boring company, as they are in the food and snacks industry, there can certainly be some good moves here. So starting out, this company definitely has a nice long history of uptrending pretty strongly and consistently. And what I do like about them from first glance is that while they aren't as exciting as some, AI chip biotech company, they do have the ability to, hold up better than some other companies, especially in economic environments where conditions worsen, just given their industry. Looking at MDLZ, they had a pretty good day on Friday as Wells Fargo upgraded them, and they had a, pretty good day, around 3% to the upside. They're getting closer to a potential breakout right around the $69 to $70 area, and the stock definitely is moving in a meaningful way. I definitely do think this big money trade is interesting and definitely worth looking into, but I will say you have to make sure that this trade is something that aligns with your trading style, because this options expiration is all the way out until January 16th of 2026. So if you're someone who only trades and holds options for, 30 minutes, then, this might not be a setup for you. But if you're someone who isn't that into, ultra short-term trades and are willing and happy to give trades more time like this, then this might be something that you want to check out. So definitely check it out. It's an interesting setup, and it definitely has quite a bit of time to it, which is nice to see. And on a quick side note, if you're new to the channel, welcome, and definitely consider to subscribe to get our videos recommended to you more often. Basically, we cover the most important news, information, chart setups, SPY levels and analysis, big money trades, and just about everything you could possibly need to know in the market every single day. We cover information and charts and data that you'd never otherwise see, so it's definitely worth subscribing so you can get our videos recommended to you more often. But we also want to give a giant shout out to today's member of the day, AC Philly. He crushed it last week and is a great member of the trading floor. He had over $6,500 in gains on the week, so huge shout out to AC Philly. Keep up the great work going forward, and it is awesome to see screenshots like this one. If you are into short-term trading, definitely check out that first link in the description and the comments down below to get full access to the StockedUp trading floor. This will give you access to our army of custom trading bots, daily big money plays. You can chat with Tom and myself all day long, join our weekly live events, and just join a great community where you basically have access to every resource and information and channel that you could really need for short-term trading. So definitely check it out. It's awesome, and it's a great place to be. And even SurgeBot had some pretty good action on Friday as well. Besides that, we are set for a very exciting week. Like we covered, we have some serious things going on in the Middle East right now, and there certainly is a lot of risk as to how things play out going forward. Don't forget about the Powell testimony on Tuesday and Wednesday. This should move the market quite a bit, and definitely check out all the setups covered in today's video, as there should be some pretty solid moves. We're set for a pretty exciting week. Thank you all so much for watching, and let's crush it in the market tomorrow.